Hahn-Tech Premium Trading Tools, professional quality tools designed to sharpen your edges. Hi guys, welcome to the second video in our demo video series for the volume profile and TPO profile indicators. Just as a quick reminder, here's the list of videos in the playlist, and we are currently here on support and resistance levels. If you have not seen the overview yet, you probably want to go ahead and check that out. This video will be demonstrating things in a bit more detail so that you get a more exposure to these levels of support and resistance and understand how they may be used in your own trading methodologies. So let's go ahead and get started. All right, so we've got a market profile, either volume and or TPO, right? And TPO stands for time price opportunity. So we've got two different indicators available. One is a volume profile, one is a TPO profile. Those who purchased the volume profile previously are getting the upgrade of volume profile for free, and you'll also have an opportunity to purchase the TPO profile for a discounted price equivalent to the discount we offer on our website. So I've included the daily pivot of PP as well as R2 and S2, and I've got higher time frame moving averages. Now I want to take a moment here before we get into the slideshow and explain to you what we've done in selecting these levels. I want to show you some of the work that I've done. And this is just an example of something that I've done here. I call this key levels, and you can see that I've got a spreadsheet here, and you've got the Dow Mini, you've got the Russell 2000 Mini, you've got the S&P Mini. Actually, these are the micro versions, not the mini versions. And you can see up here these various levels, okay? And I started this with my own trading, right? This is something I did for my own trading. And what I did is I went through each of these days, and if a level was a solid brick wall in which prices met that level and reversed, okay, whether to the upside or the downside, it got a value of 2. Okay, if prices held at that level and didn't go beyond that level, all right, but didn't actually reverse, then it got a value of 1. If prices blew right through that level without even blinking an eye, then it got a -1. So I accumulated all of this data, and you can see over here we've got the previous high, low, close, okay, and we've also got the daily pivot, the R2 and the S2, okay, and you can see down here I've got a ratio. So what I do is I accumulate all of that data, and I determine for my own self, you know, which of these levels are truly important and which ones can be ignored. And so I did that to clean up my charts for my own trading so that I'm only got levels on there that will help me to understand where the potential support and resistance are. And you can see here that R2 and S2 are green on each of these. That's what I really wanted to point out here. Okay, is that for each of these, I found that R2 and S2 are very strong. You see all the 2s in these columns here? So those are very, very strong levels. And that's why we're not including R1, S1. That's why we're not including R3, S3. It's just R2 and S2. We're going to keep it as simple as possible. And as you watch my slide presentation, it will become very clear why I selected those levels. And so let's go ahead and dive right into that. Okay, so for the first chart here, we've got just a plain chart with candles. No indicator is plotted here. All I've got are some circles here drawn to show some points of support and resistance that the price encountered during these 2 sessions of the market. And I want to ask you, would you have been able to make a profit if you had a heads up to understand that those might be levels where prices would react, get stalled out, or reverse completely? Then let's go ahead and introduce the volume profile levels. Okay, so now we introduce the volume profile levels, and you can see how we've got the value area low over here was a very strong resistance level once it got breached, okay? And then over here on the right, you can see the point of control was very strong resistance here. As prices tried to move higher, it failed and reversed twice. There were 2 opportunities there that you might have had to go ahead and trade those. But what about these other levels? Okay, we don't have anything for these other levels down here. Well, let's go ahead and add on the next one. But first, I want to show you the same chart. Now, this is exactly the same chart, but this is the TPO profile. Okay, so the TPO profile, you see how those levels pretty well line up. Let me go ahead and flash that back and forth a little bit so you can see how those levels are very, very close. Very slight differences You'll see larger differences as we move on. There's examples where the TPO and the volume profile diverge quite a bit. But let's go ahead and now move on to adding another level of support and resistance. And that is the daily pivot as well as R2 and S2. Now things start to become a little bit more clear. Right down here you've got S2, that's the red line down here with the squares. And then on the right side, again, once again, that was where the markets pretty much lost their downward momentum on each of these trading sessions. So you can see how the S2 has been very pivotal. Oh, that's kind of punny, isn't it? Pivotal, the pivots, right? And so you can see also here the cyan and magenta squares. That's the PP, right? That's the daily PP. And pivot is what that stands for. So you've got that POC. All right, so let's go ahead and now add in the next level. So we're going to add in daily moving averages. So what you see now, we've added to the chart, you've got the white line that kind of zigzags across the chart. That is the 21 period EMA. The yellow line is the 8 period EMA. And so you can see from here that you have the 8 period EMA is below the 21 period EMA, which means that on the daily basis, the trend is downward, okay? The short-term moving average is below the longer-term moving average. That gives you a downward bias right off the bat. So you can see that clearly right here on the chart because we've got those daily levels, and you can see how they also acted as a form of support here, okay, before it was finally broken, and then formed a point of resistance here and here, okay, as those levels were touched. So now let's go ahead and take a look at another example. Now as you kind of have an idea how this works, you probably are already expecting what you're going to see. So we've got 3 different trading sessions here, and I want to point out these arrows. These arrows are not produced by the indicator. I manually drew those arrows as a potential scalp, okay, a scalp condition, all right? You see the market has been stuck in a range right here, trading back and forth. So as we add new levels to this, you're going to see what generated that pattern. Okay, so now we're going to go ahead and add the volume profile. Okay, so we look at the volume profile levels now. Over here you've got the value area low from that session is reacting as a very strong resistance level. And then the same thing over here. Once it's breached, you can also see, look at this unbreached POC right up here. When that was touched, that was a very strong reaction and market strongly reversed there. So you can see how that might be an opportunity. You can see a signal here. These little cyan colored wedge shapes are telling you that is actually forming a support. It's actually acting as support, at which point it was eventually broken. I don't want to go into too much detail here, but then you got another signals over here, these little wedge shapes over here that are magenta colored. Okay, that's indicating potential resistance at that level. So, and you can see that over here as well on the right side. And that was actually the value area high, in which case the price approached that area and was a very strong resistance, and you had some signals here to give you a heads up. Those also will trigger alerts on the chart, and you've also got that available to you in the watch list columns as well as custom scans. So you can scan for these signals as well. Okay, so now what about down here? You've got some reversals down here, and you don't have any volume profile, so guess what's going to happen when we add in the rest? Well, before we do that, let's go ahead and take note of these big yellow arrows here. Okay, remember I told you in the previous slide that there'll be some examples where the volume profile and the TPO profile vary a little bit more significantly. Well, let's go ahead and take a look at that. I'm going to go ahead and show you the TPO profile, same exact chart, but TPO profile. There you go. So you can see where those yellow arrows move. Okay, so I'm going to flip that back and forth a little bit. And if you want to go ahead and pause the video and examine those more closely, then I'll let you go ahead and do that. Okay, so now we're going to take it from the volume profile screen. We're going to show you the next one where we add, what are we going to add next? You should know by now, all right, we're going to add daily pivots, the R2 and the S2. So let's go ahead and add those in. Now there's something else here that's included in the daily pivots, and that is the previous day high and low. So you see this red line here was the previous day low, the previous session low, and again over here, okay, on the right, you see that red line, that's a previous session low. The green line that you see up top here is a prior session high. Okay, so those also form very strong areas of support and resistance. And you can see in this particular case where I had those magenta and cyan colored lines that the price really chopped around in that area. giving some people who like to scalp an opportunity to potentially scalp that. And you can see these reversals down here that were kind of a mystery. Well, once we add in the S2, it becomes pretty clear that the S2 was involved in those reversals as well. Okay, so let's go ahead and move through the rest of these charts rather quickly here because I know your time is valuable, but I want to show you some more examples. So we've got this example here. We'll go ahead and turn on the volume profile so you can see that. And again, I'm going to go through this rather quickly so that you can review the video at your own leisure. But you notice this point of control here was acting as a little bit of resistance, but then eventually price moved up through that and traveled a little bit higher. Now you can see where is this level right here. Well, we'll go ahead and first compare the volume profile to the TPO profile. Okay, let me back and forth here a little bit. Those levels are pretty close. Okay, and now we'll add in the PP, the R2 and the S2, as well as the previous day high and low. You can see right up here, after it pushed through the unbreached POC, that eventually it stalled out here. And when we get to the settings, you'll see that you can adjust these. Okay, it's daily, weekly, or monthly. Okay, so you have the ability to select whatever it is, whatever time frame that you're trading, you have the ability to select either daily, weekly, or monthly time frames. We're going to get into that when I show you the list of features. Okay, so let's see, the next screen we're going to be adding the daily moving averages, and so you can see how the 8-period EMA was a pivotal mark on the chart there, along with the previous day high. You can see how on both days that really acted as a strong form of resistance. And then we'll go ahead and look at the next chart. And you kind of got the idea by now, so we'll go ahead and take a look at this now. And again, just look at that and say, boy, if I had known ahead of time that those were going to be areas where prices react, could I have made a profit in these two sessions? That's what you want to ask yourself here. And then look at the tool and determine whether or not the tool gave you the information that you needed to make those choices. Now the volume profile helps a little bit here with this reversal down here, and you also got a signal showing support. Notice that once a level is breached, when it pulls back to that level, it also usually forms a nice little support, so it changes from resistance to support, and you'll see that on the charts. Now let's go ahead and compare the volume profile to the TPO profile. In this case, the levels are pretty darn close. Okay, not much of a difference there, so I didn't make any notation. So let's go from the volume profile now and look and add in the daily pivots. Now you can see the daily PP over here, very strong resistance. And once again, S2, very strong support there. It wasn't a big reversal, but if you were short, you would probably want to go ahead and think about maybe I should close that trade out for my profit, maybe even put my profit target down here. And the same thing in the reverse side. On the right side, you see we went up and tagged R2, okay, the green squares there. Okay, so I need to keep the video moving here, so let's go ahead and add in the daily moving averages, which completes the picture. So you can see now the confluence. Look at this area right here. The blue line is the 50-period SMA. The magenta line here is the 200-period SMA. That's daily. All right, and the yellow line here is the 8-period EMA. You've got three of these major daily moving averages all grouped together. We call that confluence, and look at how strong that was, and it also coincided with the value area low. And so let's go ahead and take a moment to consider this. And you want to examine this again from the perspective, if you had known ahead of time when you saw this, this was your chart, if you had known ahead of time that where all those support and resistance levels were located, would it have helped you to make profitable trades during these two sessions? Okay. Another concept that I want to throw at you here now, we're shifting gears. In addition to support and resistance, we want to understand the concept of momentum and trade bias, right? Whether you want to be bearish or bullish. And one of the things that I've learned from a very successful trader who I've personally learned from as a mentor has taught and continues to teach the concept that the daily 21-period moving average is your guide. When you're above the daily 21 moving average, you buy the dips. When you're below the daily 21 moving average, you sell the rallies. It's a simple rule, and it's not hard and fast. In other words, it can be broken, but you need to be very cautious about that. And I tell you, in my own trading, it has really helped me tremendously. And so you want to also understand that when you have stacked moving averages, the bias is obviously much greater than when the moving averages are helter-skelter, kind of all around. You know, for instance, over here, when they're all bunched up together like this and they're really kind of flat, the price just kind of ping-pongs back and forth and gets trapped in a range. I see this all the time. And so really, if you're looking for catching a runner, if you're that type of person that likes to find and identify the direction of the trend and jump in and ride that trend like a wave, then you want to make sure you look for stacked moving averages. But if you prefer to scalp and you like that little, buy a little, small profit, small target, and just in and out, with little small profits here or there, then you want to probably look for when price gets trapped in these areas where the moving averages all come together and the price gets constrained or restricted into a very tight space. Okay, and then the final one that I want to show you, this is kind of funny actually. The Federal Reserve, they've been roiling the markets. And it's really frustrating for me because when I'm trying to trade, the first thing I do is I look at the economic reports to find out if any of the Fed governors are speaking before Congress or at some economic forum or something like that. Because these days, with the transition from high rates to potentially flat or potentially rate cuts, the markets are just absolutely boiling with any little whisper of news that comes out of the Federal Reserve. And when these guys are talking, the markets go crazy. And today was a perfect example of that. We had 3 Fed governors speaking today, and this is what we had in the markets. And so here you've got 3 different charts. You've got the Dow futures on the left. In the middle is the Russell 2000 futures, and on the right is the S&P 500. This is a dashboard that I use in my trading every day, and I use these levels and these indicators, and I look for these opportunities. But I tell you, on a day like today, when I see that the Fed governors are speaking, I just walk away. I go and do something else and let my swing trades make my money for me, because the intraday stuff is just a nightmare. How would you know that once the market, look at this huge move, look at that big 5-minute candle. It's a 5-minute time frame, huge move right here. And then how would you know that it was going to be exhausted? Think about how many people bought the top right there thinking it's going to go to the moon because the Fed has said something incredibly positive for the markets, and then it turns around and collapses right back where it started from. And this is the type of environment that me, as a beginning trader, as a novice, a very young, in trading years, very young. For me, as a novice trader, I have to know when to stay away from the markets. And this is one of those times when the Fed governors are speaking. And that brings us to the conclusion of the video that covers the support and resistance levels. And just as a quick reminder of where we are, this is the second video in the playlist. And the next video in the playlist that I recommend is the risk reward drawing tool. I think you're going to be really surprised, pleasantly surprised that is, to see that this tool is available. And it's just a built-in tool already included with Thinkorswim. And I'm going to show you how you can use it for measuring your risk reward directly on the charts.